market is screaming right now. Rumors are flying everywhere. You've got folks shouting that silver is going to $300. Some are saying $500. Hell, some are even daring to call for 4 digits. Hearing that, your gut reaction is probably, get out of here. That's exaggerated. That's impossible. Right? But let me school you on something. In history, every single life changing change, your tax bracket supercycle looked exactly like. It's impossible right before it ripped. The moves that actually change your destiny never happen when everyone thinks the price is reasonable. They kick off exactly when everyone says, this is pure madness. That's when the curtain rises. No fluff today. Let's strip this silver trade down to the bone. We are entering a very rare historical phase. This isn't just a bull market. This is a structural revaluation meets a physical supply crisis, with a side of monetary system collapse. We ain't talking about a cute 30% or 50% pop here. We are talking about completely rewriting the pricing logic for silver. At this critical juncture, I gotta bring up a name. If you follow technical cycles, you might know him, Francis Hunt. This guy isn't one of those loudmouth influencers just screaming moon moon all day. He is a technical fanatic, obsessed with wave structures and macro rhythm. Recently, Francis Hunt dropped a bomb. The gold to silver ratio is entering what he calls a contagious collapse zone. If you don't speak trader, let me translate. Once this structure confirms a break, silver prices will no longer be leashed by any traditional models. We are going to enter a state of total loss of control, driven by raw emotion and capital flows. A lot of retail guys get it wrong. They stare at the absolute price of silver all day. It drops $2. They can't sleep. It goes up $3. They want to cash out. You're missing the point. What decides the magnitude of this run isn't the price. It's the gold to silver ratio. This ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Zoom out a few thousand years. Ancient Egypt, it was 8 to 12. Middle Ages, 12 to 15. Even in modern times, it usually floated between 30 and 60. But here's the kicker. For the last few decades, this ratio has been manipulated, pinned at 80, 90, even spiking over 120 in the grand scope of history. That is perverted. It is extreme. It means silver has been suppressed to the absolute bottom of the barrel relative to gold. Hunt's view is razor sharp. This artificially high ratio wasn't natural. It was the financialization era. Wall Street holding it down through paper silver derivatives and inventory management. But the bottom line of that game is, you eventually have to deliver the metal. And that game is over because the premise of plenty of physical inventory is disintegrating. When the ratio crashed from 120 down through 65, the technical structure changed forever. In Hunt's system, this isn't just a number, it's a massive multi-cycle head and shoulders neckline breaking. The suppression is over. The trend has flipped. His technical target, 32, but he thinks the end game isn't 32, it's single digits. Get your calculators out, folks. This math will make your scalp tingle if gold hits $3,000 and the ratio drops to 9. Silver is $333 ***. If gold hits $4,000 and the ratio drops to 8, silver is $500 ***. And that's not even accounting for the dollar purchasing power going down the toilet. Why is this time different? I know, you've heard the cry wolf story before. You're immune to the hype, but the difference this time can be summed up in one sentence. This isn't just financial speculation. The physical supply system is breaking. Here's a piece of cold knowledge even veteran traders miss. 60 to 70% of global silver is not mined from silver mines. It's a byproduct. It's what you get when you dig for copper, lead, zinc, or gold. What does that mean? It creates a deadly situation. Even if silver prices explode, miners cannot quickly ramp up production. Giants like BHP or Rio Tinto plan their digs based on copper and zinc prices. They aren't going to dig more copper ore just to get a little extra silver. It doesn't make economic sense. In economics, we call this extremely low price elasticity of supply. And the demand side, that's a tidal wave. Solar panels, EVs, smart devices, missiles, data centers, 5G stations, modern civilization basically runs on silver's conductivity. And the killer blow, solid-state batteries. If Samsung or Toyota starts mass commercialization of this next-gen tech, the battery sector alone could eat up the entire annual global production of silver. That's before you even build a single solar panel or iPhone. It's a deadlock. Even if every mine on Earth runs 24/7, a physical shortage is baked in. When you have something that is both industrial blood and monetary metal, and you hit a supply wall, there is only one way to adjust: violent upside pricing. Price it until you can't afford it. Price it until demand is destroyed. So, how do you actually make money in this violence? Francis Hunt hammers home one concept, the parabolic law. This is anti-human nature. It tells us that in any true asset bubble or super cycle, over 50%, hell, maybe 80%, of the profits aren't made in the slow grind up. They are made in the final, shortest window of time. The last few weeks, maybe the last few days. This means if you hold for 5 years, watch it chop around and then sell early because of panic, or thinking that is enough profit right before the madness starts, you are handing the juiciest cut of the meat to someone else. That is the classic retail mistake. You have diamond hands for losses, but paper hands for profits. When price hits your logical target, your brain will say, sell, this is irrational. But Mr. Market doesn't give a damn about logic. He runs on emotion. In the parabolic phase, the logic isn't value. It is, I must buy this now at any price, or I will be left behind forever. The true top is never calculated by math. It's pushed there by the sheer terror of missing out. Hunt warns that when silver enters the loss of control phase, you will feel a pressure you've never felt before. Silver at $300. You think it is expensive. Silver at $500. You think it is a bubble. Silver at $800. You think the world is ending tomorrow, but the market will slap you in the face and keep ripping higher until every single short seller is carried out on a stretcher. Here's a fun indicator for you when you see the New York Times, CNN, and the television at your local 7-Eleven talking about the silver boom every day. When your cousin who has never traded a stock in his life asks you, hey, should I buy silver? That is usually the end of the bull run. So the key is, can you spot the setup now? Can you sit tight on the bus while everyone else is still shouting, is this a scam? I know the biggest demon in your head right now. It's one question, is it too late? That question exposes a typical retail mindset. Everyone wants a safe price. You want the market to gently pull back to where it was 2 years ago, let you on board, and then go up. Wake up. Real trend moves never give you a comfortable entry. If you look at the monthly chart, this is a runaway freight train. It won't give you a deep discount. But if you zoom into the daily or 4-hour chart, sure, price drops because of noise, profit taking, the Fed talking smack, liquidity drying up. To the pros, as long as the macro structure is intact and the gold fee-silver ratio is crashing, those pullbacks aren't danger signals. They are gifts from the gods. They are your last chance to punch your ticket. Most people die of hesitation. At $30, it's too expensive. I'll wait for $25. At $50, it rose too fast. I'm scared to chase. At $80, surely it's going to crash. Then at $150, watching everyone else get rich, they lose their minds, go all in, and buy the exact top. The hard part isn't the technical analysis, it's the psychological warfare. Francis Hunt puts it bluntly. You want to participate in a historic move, you have to accept the fact that you must force yourself to buy when it feels uncomfortable. Uncertain and scary. That is the unbridgeable gap between professional money and retail money. Can you hold onto the trend like a pit bull when the pressure is crushing you? When Hunt said, at that stage, I don't know what the dollar even means. That is the most terrifying line in the script. Silver's explosion isn't an isolated event. It is a mirror reflecting the collapse of the entire fiat currency system. Think about it, $35 trillion in US debt. Deficits that never end. Money printers running hot, geopolitical chaos. All roads lead to one destination. Paper currency purchasing power goes to zero, and hard assets reclaim the throne. In this environment, real players aren't looking at how much USE is in their account. They are looking at how many ounces do I own. When that hoarding mentality takes over, silver isn't an industrial metal anymore. It wakes up as money. Once the market treats silver as money, pricing logic has nothing to do with supply and demand. It becomes a game of faith, and when faith in the dollar breaks, price targets go beyond your imagination. So, the million-dollar question, if it goes that high, when do I sell? Hunt's answer is simple and brutal, ignore the price. Watch the ratio. Staring at the dollar figure will just give you high blood pressure and shaky hands. But the gold to silver ratio reflects the emotional water level of the entire market. When that ratio hits single digits, when the market goes from rational to manic, when every person on your Facebook feed is reposting silver get-rich-quick schemes, that is your signal to slowly back away. Note, I said slowly back away, not panic dump. Pros don't try to sell the exact top. That's for God. They scale out, sell a little, lock in profits, let the rest ride the bubble. Don't make the stupid mistake of doubling your money and running away. The tail of the bull market often holds more profit than the entire body of the fish. Look, folks, history proves again and again, for the average guy, the biggest risk isn't short-term volatility. The biggest risk is standing outside the gates of the trend, watching the wealth transfer train scream past you. Even if you buy a little high, you might feel bad for a bit. But if you miss the cycle entirely, that regret lasts a lifetime. Years from now, looking at those insane prices, you'll realize the moment that could have changed your life was right now while you were hesitating. So I'll leave you with this, facing a market that might shatter your reality. Are you on the bus or are you watching from the sidewalk? Are you here for the long haul or just trying to scalp lunch money? Where do you think this madness ends? Don't keep it to yourself. Drop your real thoughts in the comments. Let's debate. Let's replay the tape. No hindsight trading here, just real logic. If you don't want to look back and regret, every decision you make right now matters. I'll see you in the next one. Don't be late.